My people was good. This was Monday, first day of the year. We was looking at Audcad on the day chart. You know what I'm saying? We on the daily looking at it. So I marked my range. So we working within this range. I got my premium zone marked out, my discount zone. If you don't know what premium and discount is, do your research. That's my equilibrium line right there. It's basically the 50% premium is where I'm looking for sales. Discount is where I'm looking for buys. Those yellow lines on my chart, excuse me, you know what I'm saying, I spelled it wrong. Those yellow lines on my chart is where liquidity is resting at. So if I'm looking for a reversal, I want to see those liquidity zones marked and taken out. You know what I'm saying? These areas can act as gas to push price to the next level of wherever it's going, right? So looking at this chart, I see we, making higher lows. The trend is bull right now. We're in an uptrend and we approach this equilibrium, which is like 50% of our working range. I dropped down to the 4 hour. You know what I'm saying? Those the liquidity zones, the yellow lines that y'all seen on the daily chart, right? On the other time frame. So now we're getting a zoom in of price, basically looking at it in a different range. How each candle is 4 hours. Right there, I'm starting to see, all right, I got a change of character. This strong move right here pushed price low. We got a change of character, showing that price is basically not willing to break down. So when I drop down into my hourly, you know what I'm saying? I got a closer look, and I want to look at these higher lows and see, is this, a valid setup for me to be looking in interest to? So I'm marking my higher lows. I'm gonna put out a bunch of those, mark them up. Each one of those would be considered a higher low. Yep, all of those. So each one of these where I got the yellow line, that would be considered a higher low. And then, the one to the far right is the one that basically broke structures. And they created a lower low. So watching this, I'm just marking up my lines, crossing my T's, dotting my I's, showing you guys, these are the higher lows. That low right there, I wouldn't consider it a lower low because it's not a clean break, the one like a break that I would be looking for. The one that I'm looking for, I'm gonna zoom in and show you, is this one right here. You see how this strong imbalance pushed down? How price leaves, an impulsive move, those impulsive red candles right there, and it takes out that low right there to the left of that line, and it creates a lower low. This low is lower. Remember, we was making higher lows, but now we just made a lower low. So we have a change in character, and then I want to box this area up to show you guys the imbalance area. All of this will be considered the imbalance when you look at those red candles to the left, those strong impulsive candles, that's the imbalance zone. So as my price get up in there, I want to keep an eye on this. I mark it red because this is where I'm expecting price to drop out. I'm expecting price to kind of respect this area, and I want to watch it. I don't want to try to predict the market. I want to react to the market. So if the market blows above that and keep going, then I'm cool with it. I'll watch for the next setup. But if the market gives me something I want to see, then I'll take the trade. Now, these liquidity areas will be the area where I'm looking to take profit. Remember, I said that those liquidity areas are areas where price would kind of drop to and reverse out of. Look at it kind of like gas money. When price takes that area, that liquidity right there, that gives it gas to go wherever it wants to go. So if I'm marking this up as a trade, just as I did in the video, I put my stop loss above that high, the highest high over there, and I want to drop my TP down to these liquidity areas, because remember, these liquidity areas are gas money for a reversal. You can either take the first one or the second one. If price pushes down to that first one, I'm cool with it. You know what I'm saying? If it wants to keep going to the second one, I'll just ride it out and take some partial profit up out of there. And yeah, this is a 1 to 5.3 setup, I think. And you know, this was on a Monday. I was looking at it, chilling at the house, and you know, this how it looks on a higher time frame. So as I was looking at it, you know, I was kind of just basically marking it up and waiting to see what would happen. And if this was a setup, which I think you could take the setup, I was thinking that you can go ahead and take the setup. Once I see that impulsive move like that, I kind of got my eye trained to see like, okay, this is something I can just jump in. You know, you might not have the time to zoom in and watch the clock and, you know, basically catch when price decides to do whatever it do. So this is a safe way to take this setup. Now, I'm basically showing you guys right here, all right, if price drops down from there, these are the areas, and this is what could happen once price gets to these levels, these liquidity levels. Price can reverse either from the first one or the second one. I'm not trying to predict it. I'm trying to react to the market. I like to keep an eye on the market and just, you know, whatever the market gives me, you just got to react to it. You can't. If you're trying to predict this market, you're going to be wrong. Reacting to it ain't never let me down. Reacting to what you get, what this market give you will never let you down. So this is the setup that I was looking at, and this is, you know, the one I would take. Hey, today is Thursday. You know, we marked this up on Monday. We currently sitting at 90 pips. 90 pips from our entry. Price fell, and we looking real good. This is the 4-hour chart. Let's see what happened on the 1 hour. Remember, we had our stop loss above this high right here. Stop loss was above that high, the highest high. Remember I said that? All right. Price came up here. Want to come around and play up there. This is why you don't use this one. Use the highest high, because this right here would have wicked you out. After that, we fell 90 pips. Easy money, baby.